Welcome to the Two Fun Guys podcast. We have Mike Klein here today. There's a changing of the guard in the government. There's a lot of talk about crypto really taking off, things changing, just the whole financial system, so many different things. And I've been interested in crypto the last 3-4 years, and I've invested in it, but I've had several people try to explain to me what is crypto. And I feel like I almost get it, and then I just lose it once I stop really thinking about it that much more. And I remember I had a venture capitalist guy come in to train with me one time. He was from Idaho, he made a bunch of money, moved out there, was in town doing deals and all this stuff. And he's like, what do you think I should focus on investing in the next 20 years? And he's like, 100% AI and crypto. And so I want you today to help teach me and everybody listening the basics of crypto. But I also want to dive into some of these different coins like XRP and what they really mean, different kinds of wallets from warm to cold, and then also what's going on in the government and you see internationally too. So welcome to the podcast, man.
Let's jam.
Yeah, let's do it.
Thanks for having me.
Thanks for coming, Mike.
Yeah, 100%.
Tell us a little bit about your story, how you got into starting your podcast, starting a fund, all of that.
Yeah, so I did about a decade in venture capital. So my mid-20s, I was kind of like figuring out what I wanted to do. I was going to go to medical school. I decided that wasn't for me. I did a little bit of corporate, and I'd always been around, startup founders. And I had this love for finance that continually grew as, my education, went into my master's and all that. And I was like, oh, great. There's this profession where you can combine finance and startup and, emerging technologies. And, a lot of when you're growing up is just figuring out all the different things you can do, right? Like when you start off, it's like 4 things. You want to be a business person, a doctor, it's just a couple things. And then you realize there's all these cool niches. And so I said, great, I'm going to go be a venture capitalist. And a few people that, were close mentors of mine were like, oh, that's great, but you can't do that. And I was like, why can't I do that? Like, well, you didn't go to an Ivy League school and, you weren't on that track from the beginning and your dad's not super rich and these are really hard jobs to get. So I just de-risked for the things that I could control, and I networked a lot, and I got my first VC job. And luckily, one of the first companies that I picked very early in my career ended up being a really big winner. And so I did about 3-4 years of early stage venture capital, which is investing in companies that are not so much as I just have an idea, but like we've generated maybe $100,000 in sales or pre-sales, and so there's some indication of market product fit or success. And love it, love working with founders, love the whole business model of venture capital, which is effectively we're going to grow the pie together, where I think a lot of traditional finance is, how can I screw you over in a gentlemanly way to get the most amount of the pie possible, because there's such a limited amount. And I really gravitated towards that and helping founders kind of from let's solve the problems that you're encountering versus the private equity model, which is more, we really don't care as much about the founders. We're going to buy the business and then we'll put our own people in. And so I then transferred over to late stage venture capital, which was like a lot of putting companies together to merge them together for future sales. It was investing in companies that had, maybe 30, 40, $50 million in revenue. And I was at a pretty big firm. I was spending a lot of time in New York. And I ended up moving out to Colorado to do early stage again. And that's when I started to fall in love with crypto. And I really wasn't an early Bitcoin person, because Bitcoin is especially then, it was such an abstract kind of thesis, which is this escape from fiat, this kind of like anarchist, roots of, we want to control our money, and it's got like cyberpunk roots, which is cool, but I didn't gravitate towards that early. And when Ethereum launched, which is essentially this application layer where all these companies build on top of it. So I use the analogy of, Ethereum or a layer 1 is effectively like an app store. Mm-hmm. So, you go on Apple's app store, there's all these different applications. Well, each of those applications is a company, right? And somebody whether it's a game, whether it's a fireplace app, whether it's, Excel or an Excel competitor, people are able to use that platform to distribute to a lot of people, different consumers. And so I said, great, this is basically what I've been doing. This is venture capital, right? And at the time, crypto was still pretty taboo. It was starting to get in that initial craze, if you guys remember, of, companies would launch and they would skyrocket in value. And the space has always had a little bit of a degeneracy marketing going on with it, like when Lambo, right? I remember when that became a thing and all these different phrases. Mm-hmm. So initially I was looking for someone to really invest my money, and I wanted somebody with really good portfolio management training and background, but then somebody that was like in the mix, because it's very much like crypto is very much an insider game where you want to be there, you want to be talking to founders, you want to be at the conferences, you want to understand what's going on in real time, especially because the space moves so fast, you can easily miss out on something. And so I looked for somebody for like a year, and I really didn't find anybody that met that criteria. So I was like, well, I'm either going to have to become the expert in this field or miss it, because I'm not going to like blindly invest in something, because that's not really investing. And I was like, all right, I think this is my path moving forward. And I had, once again, a couple of mentors pull me aside and be like, you're on a really good track in the traditional VC world. You're going to sort of get a bad name for yourself going after this. But I was like, I think the opportunity is too great. And I think that this is much more similar than you guys think. And so fast forward, I took all the principles that I developed in venture capital, and I think there's actually, we can talk about, there's a lot of like things that you learn to handle in venture capital and the way you learn to think in long-term time horizons. They're really advantageous and help you kind of mitigate the day-to-day. I wake up and this thing I bought's down 20%, or, it's up 20%, and all the hysteria that goes along with those price movements in real time. And so I launched a fund last year because I got so much pressure from my internal network that, hey, we want to participate in what you're doing yourself with your own portfolio. And I remembered what it was like to be entering that world and not have really an idea what to go on, to feel the imposter syndrome, or like you're the dumbest person in the room, and to buy something and it go down or go up and you're not even sure why it did that.
What was the thing about crypto that you were like, it's worth taking the risk from leaving my original path?
Yeah, I mean, personally, I viewed it as the same path. And I assumed that like my colleagues and my peers would eventually recognize that. And I think that has started to really happen. But, I really just saw it as the next version of the internet, which is how it's been presented, Web3. And, I was there going to conferences. I remember going to Ethereum, Denver, when it was like 200, 300, 400 people. Now it's 30,000 people. I remember, it was like one little room, like, not much bigger than this. And Vitalik, who's the founder of Ethereum, would be talking on stage. And so, I got to know these people. So to me, it wasn't just numbers and moving around and tickers and symbols. It represented, some of the smartest people in the world. So whenever you're looking at an asset class, and AI is very much this way now, or a new technology, one of the surest ways, as a rule of thumb, is look where all the smartest people are gravitating towards, right? Because you get a lot of human capital then that's building in that space and maturing and evolving that space. And crypto has constantly cherry-picked some of the brightest minds from not only like the technology field, but also the finance fields, right? You always hear of, this Goldman Sachs person's leaving to go, be in crypto. And so, there's something obviously there just from like a very high level in seeing and talking to the people building in this space. And for me, it was very clear, if the smartest people keep going here and they keep building here, it's going to be very successful.
So just to make sure I understand, you've taken the concepts that have made you successful in the VC world and been able to apply that pretty much directly to crypto, because they seem wildly different, but when you look under the hood, they're very much the same. Like this coin that's being launched is not just a ethereal concept. It's a business, it's a startup, it's a company, it's got people behind it. And so you're looking at it through the same lens that you would with VC. Is that right?
Yeah, 100%. Okay. I mean, look, the idea is, where is crypto going to be around in 5 to 10 years? And for it to be better and kind of be this ubiquitous financial system, what needs to happen in the space? So our investing thesis all stems from, we need better infrastructure, which the analogy for the internet would be like faster bandwidth speeds, right? You need better interoperability. So everybody's aware there's all these different chains and projects. How do they communicate with each other? And then you're seeing this movement of traditional assets like mortgages and different sort of, it's called RWA or real world assets, but US treasuries moving on chain as well. And so we think in like 5 and 10 year increments, and then we invest in the companies that we think are building towards making those improvements. And obviously, the deeper you get in the space, your edges of seeing what needs to happen emerges. Like, you mentioned you've been in crypto for a while, so you've experienced some of these pain points, right? Especially if you start doing stuff out of your Coinbase wallet and on chain. It's like, oh, I heard about this project, I want to buy it. And they're like, oh, it's on this chain. It's like, well, how do I get it there? Well, you got to move money from your bank to a Coinbase, from Coinbase to your own wallet. From your own wallet, you got to go to a different chain. Then you got to find a DEX that you can buy that coin on. And now you got to figure out where to hold it. And so the complexities kind of unwind as you enter what I call like crypto island. And I love that analogy because crypto island's this crazy, chaotic place where people are always trying to steal your money. The brightest minds are. There's, people always showing you some new project. And it's it really is. I mean, crypto is talked about as the Wild West, but it really is like the Wild West, right? I mean, like when I am, like a lot of our time is spent troubleshooting. And, when I'm interacting with a protocol or an application, sometimes things don't work. It could be hardware related. It could be software related. It could be on their end. It could be on my end. And like, there's no one usually to pick up and call in terms of a support line. I have to get on a, right? You know this. I have to get on a Discord line, which people are like, what the hell is Discord? And I gotta say, hey, I need help from a team member. And guess what? 4 scammers immediately message me, right? And they're really sophisticated now, right? Like a scammer will message me and they'll have an entire fake support portal. And they'll be like, hey, enter a support ticket. And guess what? They're just trying to steal my money.
Crazy.
And it's crazy, right? And so, it's this really interesting space because the beauty of crypto is you have full control of your assets and your decisions, but it also means you have full responsibility. And a lot of people aren't used to that. So precision is so paramount in the sense of, you don't think like if you bought NVIDIA stock 3 years ago, right? And you're way up on it. You don't think like, if I press a wrong button, I could lose the right to that stock.
Yeah.
Even though I made all this money and I have all these gains. But that's how you guys know this. That's how crypto is.
That's true. You have all this freedom, but with that freedom comes this lack of structure where you could lose all your money by just sending it to the wrong place. Yeah. And it's just gone.
There's no forgot password button.
Yeah. You could get scammed by an elaborate scam, or you could just push the wrong button.
Yeah, it's like
all gone.
It's like I tell my mom, there's no manager to call.
Yeah,
So
sorry, Karen.
So every week I get a text. This happens a lot in bull markets. I get a text from a friend. I had a good guy that I know reach out 2 days ago. He's a VC, and he's just like, hey Mike, long time no chat. And I already knew it was going to be crypto related, right? and it's like I'm trying to figure out how to get some old Ethereum I have on a wallet. Can you help me out? Or like somebody will send me a hash and be like, I just sent, some Bitcoin to this address and it's been an hour and I don't know where it's at. Right. And it is kind of like a crazy thing, right? You're sending, some people are sending hundreds of millions of dollars, right? Like it appears like off into the void and you're kind of trusting the system.
Yeah. Do you help people with managing all that? Like, so investing it, but do you help people set up wallets and move things around?
We do.
I imagine so many people like, coming to you and they're like, maybe even some older guys, like, I am not at the age where I can learn all this shit anymore.
Yeah.
I really need some help.
Yeah. So the fund is like the easy button for that. And then we do some advisory services with family offices or people that I know. Look, I'm one of those people who's always wanted to help out. But from what we offer perspective, we do some of that. And I also do some education like with financial institutions. And, you have so many legacy companies that now are realizing they need to have a crypto product or be in the space. And they'll always come to me and say, we're getting approached by vendors. We don't know what to do. And can you help us pick a vendor? And my answer, and this is very much how I think, is, well, where are you trying to go? And they're like, what do you mean? I'm like, well, you kind of have to understand the technology kind of as a overview, you and your executives, so you can make a decision and present it to your board of we're investing in doing X, Y, and Z, but not these other things, and here's why. So you got to have like a basic understanding. So we do some of that. Look, you can always text me. You have my number. I'm always glad to help out. The fund was meant to be a way that, like if you have somebody helping you on crypto, there's only so much they can do and they can't undo mistakes you made, right? So it's like if you poorly custody your assets, if you click a phishing link, which is a malicious link by a scammer trying to get your money, if you buy an asset or depending on how sophisticated you want to get, you enter a liquidity pool and you don't really understand the dynamics of that liquidity pool, you can lose your money really, really fast. And there's nothing I can do or anybody can do to get it back. Now, some of the stuff like, reinstituting old wallets, I have my seed phrase, but I lost my physical device. Yeah, we can help you out there, different things like that. But, there in crypto, as in most things in life, prevention is much more important than trying to troubleshoot stuff in retrospect.
So does the fund work in like a similar model to like a financial advisor or a fund where people give you X amount of money, you take a maybe 1% fee of that, but then you're managing the fund for all these people, but just in one giant?
Yeah.
So the similar model?
Yeah. The fund is meant to be really the solution I was looking for.
Okay.
So the idea is we have a very diversified fund and it actually continues to get diversified because new projects are launched all the time. I strongly believe that buying and holding quality assets is much superior, especially in high potential asset classes, than trying to trade all the time.
Yeah.
So we focus on long-term holding, diversification. When people buy into our portfolio, they're instantly diversified across over 20 chains and like 90 different assets. Now, that sounds like maybe we're just indexing, but in truth, that's less than 1% of cryptos that totally exist. In addition, we're able to do things like generate yield or interest on those assets, which is like the cherry on top, which massively offsets our fees. And then subsequently, just in terms of like trying to enter those positions and bridge cross train and all that, there's these things called gas fees or transaction fees that you accumulate, and those add up really fast. So a lot of our investors, they're people that probably own crypto on their Coinbase. They know it's not like the best place to hold it, especially at the amount they have. And they really just want somebody to like worry about what to invest in, when to invest, when to buy, when to sell, what to do with those assets, how to keep them safe. It's really for people that are like, look, I just, it's not my field of expertise. I'm doing it because I have to, because I don't have an alternative, but I'd love for there to be just an easy button to press.
Yeah, I wish I had that because I, a couple years ago got into like yield farming and liquidity pools and all this stuff and lost thousands and thousands of dollars because I understood it like 3% of maybe what I should have.
Yeah.
And yeah, I got eaten by gas fees. I got eaten by coins that I thought made sense or sending things through MetaMask and it got lost over here and just went to the wrong network and all this shit. So hindsight 2020, I wish I knew you.
Well, and I don't
then.
love that you lost money, to be clear. I said I love that. But
No, I love a good
that
lesson,
you've
though.
gotten this space and you've experimented. And yeah, man, it's like, look, the analogy recently I've been giving to people is it's sort of like if you and me could just drive over the lake and hop in a nuclear submarine and take it for a spin. Like, it's like there's no barrier to entry in crypto.
Yeah,
right?
it's
like,
crazy.
You can get way over your skis like super fast.
Yeah.
And the problem is often you're getting caught up in advice or hype by people that really don't know themselves, right? So the amazing thing about crypto is it's a big sandbox and you can try new concepts that, like to do in the traditional financial sector, you and me would have to go raise $1 billion, right? And like get all these licensures and things like that. Like we want to create a new exchange, right? Where people don't have to give the exchange custody of their assets. It's like, okay, well, we're going to need you to raise $1 billion and we need 10 years. And in crypto, it can get propped up immediately. But of course, it's a beta project, right? Like an early, like an alpha project. So like you said, like smart contracts have vulnerabilities in them. Things get hacked. That's out of your control, right? And then there's things within your control. And then there's the nuances of how all these sophisticated instruments work by code that if you don't understand, look, everybody that's been in this space has these learning mistakes.
I feel like that's part of being a man. You have to lose 30% of your net worth on crypto. Otherwise,
you're not a man.
Well, you're not a real man yet. You haven't earned it yet.
I love it. We need a shirt that says it.
What are some of the cringe things you hear on the internet about crypto that you just wish would be put to rest?
Yeah, I mean a lot, right? So I go to a lot of crypto conferences, and I think I'm in it for the right reasons. It's funny story. Even on I'm a single guy, and even on dating apps, I've had a few girls be like, "I don't want to date any crypto bros."
Really?
Yeah, and they won't.
Oh yeah, there's such a negative connotation.
Yeah, there's a negative connotation. I think it's like,
But they love finance bros, but they don't love crypto bros.
yeah, I mean, do they actually love fight? But yeah, like crypto bros, like the new like IB banker, like you know, like douchebag persona, right?
Blue light blocking glasses.
Exactly, right. And so,
Which I almost bought yesterday.
I think this space has done a really bad job of marketing itself. And some of it is this, like, you know, when you read about like Steve Jobs and Apple, right? Their initial sort of culture we're the rebels, right? And they leaned into that, right? And it kind of became their culture, and it kind of became what Apple is known for. I don't know if it's as known for that now because it's so mainstream, but that was sort of, you know, we're for people that think different. And they kind of leaned into this anti-establishment. And a lot of crypto is this satirical, when Lambo, go to the moon. I always joke that the theme song of crypto really should be that Kanye West song, which is like, wait till I get my money right, then you can't tell me nothing, right?
I love the degen crypto phrases and culture.
And everybody loves it. And some legitimate people lean into it. It's funny to see like the guy that was a IB banker and now he's wearing a tracksuit, a bright neon tracksuit at a crypto conference, and he's leaning into it, but he's probably not actually a degen, right? And then there are just degens, right? I mean, there's this very real component, just like you see with Robinhood, right? Like, remember when all those Reddits were going big on Robinhood, where people were like, they were borrowing money they never had because, YOLO, and like if I end up, and they show accounts with like negative $500,000 balance, and like I'll just declare bankruptcy, and so it's part of the human element, and people often looked at crypto as gambling, and that was kind of the emergence of the meme coins, and I've even seen, I money quote it, but legitimate theses on meme coins and how it's essentially you're betting on the desire for humans to want to gamble and speculate and different things like that. We don't really do that kind of stuff, but it's prevalent. I do wish that crypto was much more focused on presenting themselves. I still think it's tough because I do love the rebellious spirit, but I do think like the words we use and the phrases we use, we don't realize that outside the crypto community, nobody knows that we're joking or being satirical. And even within the crypto community, sometimes you don't know, right? Because you think someone's joking, and then like you have like, these FTX stories and things, you're like, oh, those guys weren't joking. Like they were just like not doing anything right. Like, like FTX like didn't have an account. If you read the story, they lost $100 million in a phishing link. Error, like all this stuff came to light. It was just very poorly managed and very, very poorly run, like financial firm, but then like take us seriously, sort of double take.
Can you give a true definition of a degen?
Wow. I guess I'm speaking for the degens now. Yeah. I think a degen is somebody with really poor impulse control.
Okay.
That's how I would define a degen. So, degens tend to do things very sporadically, high risk, high reward, sometimes high reward, sometimes not even high reward, right? And it really comes down to, are you guys familiar with the marshmallow test?
Yeah. I'm not.
Okay. So the marshmallow test is the only thing that's been proven to indicate future success. And you're a fitness guy. I could already say you'd pass, literally the marshmallow test. But it's basically you put children in a room and you tell them there's a marshmallow. You can have the marshmallow, but if you wait, there's something better that's going to come along. And the children that can't stop themselves from eating the marshmallow, regardless of the promise of something better in the future, fail the marshmallow test. Mm-hmm. And the ones that can do that and keep doing that for longer and more intense periods, they become more successful statistically.
Yeah, they followed those children into their adult lives and like measured how successful they became.
Yeah.
And all the kids that ate the marshmallow right away, dead, basically.
Degenerates.
Degens.
Well, and most of the good things we talk about in life, like being fit, being successful in a career, building wealth, finding the right partner, most of these are impulse control, right? It's mostly denying things that aren't right for you or continuing to put in the work or have the patience to build towards the better thing versus taking the low-hanging fruit, right? And really, it's a principle in life that can be beautifully expressed a lot of different places. I think degens in general, they have a very hard time doing that.
What are some of the coins that you're really excited about into the future? Like Ethereum and XRP, or is there stuff that is just not in the limelight that you're really excited about?
Yeah, I mean, we get into a lot of stuff. We're really excited about projects building for real world asset tokenization. So on my podcast, we had a project on board. They haven't quite launched their token yet. That's building an entire layer one to facilitate. It's built for financial institutions, right? And that's one called Provenance Chain. And so you're seeing. We also had another guy on the podcast that they're tokenizing life insurance. So you're seeing this tokenization of traditional assets, whether it be, I think mortgages is one that everybody's waiting on. Card titles. I think in the next 5-10 years, the representation of ownership of anything from a stock to your core assets like your house is going to be tokenized. And of course, like everybody thinks of that broadly as one thing, but like, you know, as I mentioned, each specific kind of asset class almost requires its own startup or Web3 company, and often they have a token associated with them to go solve that niche problem, right? So if you're like, we want to tokenize commercial real estate of this kind of class, there would be a startup that's just hyper focused on that. And that's generally how startups work. They're like very tailor focused. So we like that. We like scaling solutions for projects like Ethereum. There's other L1s like Solana that are in the mix. And we also like solutions that are building towards the seamless interoperability of all these different chains. Because for a while, there was this thesis of there's just going to be one chain, right? There's going to be one Apple store and maybe another one like an Android store. But really that started going away. There's advantages to having application specific chains. And how do I know this? Well, I'm going and talking with a lot of the founders, and a lot of these projects that have built on other chains like Ethereum, now they're launching their own chain as well. And they have like very smart reasons for that. So there's a lot of like exciting projects there. DeFi, right? Like this evolution of how do you swap currencies? How do you earn yield on the value that's locked up in your tokens? We really like projects that are always evolving there. And frankly, a lot of our strategy now has been in crypto bear markets. There's like a bunch of projects that are arguably in a much better place than they were their last bull cycle. So a coin that I like to throw out there, and I don't like to recommend coins because everything we do is within a balanced portfolio. And I found that when I throw a coin out there, people sell everything and put everything in one coin. I'm like, no, that's not what I'm saying. But there's like this project called Chainlink that you guys may have heard of. And Chainlink, it's a very important project. They're an oracle. And an oracle is basically when you have a smart contract, it's kind of like a deaf, blind child to the outside world. So if you have a smart contract that says if it's 70 degrees in Austin, do X, Y, and Z, or pay this, however you want to implement that information. Well, how does the smart contract know that it's 70 degrees in Austin? It needs verification, right? And that's true for a lot of, it's true for like the pricing of different tokens, all that. And Chainlink was around $70, I think, last bull cycle. It was recently about $8. Now it's at $17 because things are starting to get heated back up. If you looked at it from a venture capital lens where you think of like seed round, Series A, Series B, Series C, I would argue when it was $70 from the adoption that it had, the usage that it had, the partnerships that it had, it was effectively like a Series B, Series C company. And the valuation, if we followed like traditional venture capitalist rules and funding, let's say it would have been $100 million for that company. Well, by all fundamental metrics, it's like now a Series D, Series F company. It's increased partnerships, it's increased usage, it's increased adoption, right? So all the core fundamentals, but what is down? The price, right? Because in crypto, you have these big fluctuations in price. So we really like finding also older projects that we talk to the founders, we've been tracking for a long time. We feel like they're really high performing. They've done everything right from the sense of what they can control, but the price is severely depressed from its previous all-time highs, because that's just how crypto tends to work. And so versus getting focused on this is a bad project because the price is down, we look at the other way, which is we love that the price is down on really good, fundamentally sound projects.
Yeah, because you're looking super long term.
Right.
I want to kind of go back to the mortgage thing because I want to make this, relatable for everybody listening. How is putting your mortgage on a blockchain, like, what would be the benefit to that? How does that, like, someone listening is like, what are you even talking about? Like, how does that work, and what is the benefit to that?
Yeah, so all this is theory. I think it's a little easier to talk about a commercial property.
Okay.
So let's say you guys have an apartment complex that you rent out in Austin. And let's say that you tokenize it. And this is all hypothetical because it comes down to how the system actually has to work. But there could be things that you want to do, like you guys need some cash and you'd like to sell off 3% of the ownership of that property. And you'd like to do it like now. And you don't want to pay a bunch of intermediate fees. You don't want to go hire a broker. You don't want to pay all these like different fees. Well, if you had, let's say, 100 tokens that represented that, what can you do with tokens? Well, they're 24/7 markets. You could list that, let's say, on a application that was built hypothetically for this exact purpose. And then you could sell 3 of your tokens at the fair market value, which would be a combination of what you speculate it is and what somebody's willing to pay for it, right? But that's similar as if you went to market in the traditional sense. And that's called fractionalization. So this idea of that it doesn't have to be all or nothing. And we're used to this in terms of company shares, but most companies are private, and the markets for selling, which is what venture capitalists do, you invest in private shares. It's very hard to liquidate or get liquidity on private shares of anything, right? Like you have to go through this whole process, and often it's not worth it because of the fees. So now you instantly are able to, through fractionalization, sell off a percentage of it. And maybe the smart contract is written that you have the right to buy that back in the future, right? There's all sorts of things you can do. You could also take the value of those tokens, right? Let's say it's your property is worth $1 million, and you could put it in a protocol where you're earning 5% on the value of those tokens. And of course, there's like the advantages, and then there's the risks, right? And as we mentioned, in crypto world, they're both like, most of society is used to this buffer of risks, right? Like you send a wire to the wrong bank, they're usually able to get it back, right? They've got a process for that. That doesn't happen in crypto. And so, yes, you could, the person that would be terrified of this would say, well, now you're going to have a bunch of unsophisticated people taking their $1 million property that is a substantial part of their net worth, and they're going to go like put it in a protocol. What if that protocol gets hacked or they do something wrong and they lose the underlying rights to the property? And of course, these things are going to have to be worked out over time. But at the end of the day, you're having increased liquidity, increased flexibility, and fractionalization. And you're also, like, if you want to sell the rights to that, you're able now through a token to sell it to anyone, anywhere in the world instantly. And just a certain percent, versus maybe you can only sell in the US, maybe you got to find a broker. So the more that you go through these pain points, the more that you realize, wow, I can use tokenization to solve a lot of these. And usually you have founders that are from that background, right? They've done this. Like the guy that we had on that is doing stuff in the life insurance space, he's been investing in life insurance products for like 8 years. And he talked about how, they're amazing products. They have huge advantages, but the process of getting these policies set up, it's so much underwriting. You got to go see somebody and all this. And then through their platform, you can just simply buy into it could be midnight on a Saturday night and I could just buy into a life insurance policy.
Do you think this is going to overhaul the whole financial system?
Yeah, absolutely.
It's just going to, like, stocks and all that may continue to shrink to the point where maybe 50 years from now, it's not even there? Or you think it'll all eventually move to like blockchain?
Yeah, I think it's just, there was a time.
It's just a little sketchy still, right? Like everything's getting its raffleting and, the infrastructure built because there's still quite a bit of risk. But I think you're seeing more and more companies, right, put more money in.
Yeah, I think so. And for since I got in crypto, everybody's been talking about institutional adoption. And institutional adoption can be expressed two ways. One is big investment dollars. So pension funds, things like that. It's also like enterprise adoption, which is, banks, different businesses to use the technology. I did a class for a credit union, a bunch of credit union executives in New Orleans last year. And kudos to them, they were pretty ahead of time, but they realized they needed to learn more about crypto and why. They did a survey, and 70% of their constituents said that they would consider leaving the bank in the next year if they didn't offer the ability to deposit and hold Bitcoin.
Wow.
Right. So it's pretty interesting. But to your point, look, there was a time when you had to have a piece of paper to represent your stock ownership. Right. Yeah. And you had to call a broker. Well, you had to physically go somewhere for a while. And then you could call a broker and you pay these crazy commissions. And now we all take for granted the fact that, you and me can get on an E-Trade and now it's most of them $0, right? You can buy a stock. And now even Robinhood has introduced, you can buy part of a stock, right? Wow. And so we've already seen this story, right? We've already seen that all systems move towards more flexibility, more liquidity, less friction for the end user. And why crypto makes the most sense for a new financial system is because the power of the ledger technology. We don't get in these situations where you have a Bernie Madoff or somebody that's saying they're doing something and you're just trusting that they're doing something. There's a verifiability on chain to that. So, it's kind of amazing. I'll show investors, and when I do education or seminars, I'll sometimes pull up, there's like a site, rwa.xyz, and it's a site where you can see that there's billions of dollars in US treasuries and private credit tokenized on chain. And like BlackRock has a $500 million fund that's tokenized on chain. Well, I can instantly click on that fund and see where the money is coming from, that the money is actually there, any fees, who the fee's going to. I can see all this stuff. Like when I look at a crypto project and they have their treasury on chain, which is most of them, which is treasury is just their bank account, basically. I can see how much the founders are paying themselves. I can see how much they're paying other parties. I can see the value in real time. Well, in VC world, I'd have to ask you guys as founders to provide that. And I would have to hope you aren't fudging the numbers, right? And so it's all about verifiability. And finance appreciates that more than anyone because it's part of the diligence process and the de-risking process, which is this concept of moral hazard, which is, I usually do what I say I'm going to do, but maybe if the juice is big enough this one time, I'm not, right? And that's
YOLO, baby.
Right. And that's how all these stories of the financial crisis, Bitcoin was created out of the financial crisis because of this problem. Banks were doing all this stuff that they weren't disclosing, and it was really hard to get to the bottom of what was going on, like in The Big Short, right? They're flying all over the country, trying to piece together things. Well, now you could do it like in your underwear in your basement, right? If everything's on chain, you can just verify things very seamlessly. And so I think for those reasons and the reasons that we've had Madoffs, FTXs, Enrons, we've had all these bad actors, we realize that humans aren't very reliable over a long enough period of time as a general populace. And so how do we have a system that better enforces I'm going to do what I say I'm going to do? Well, the idea of a smart contract is you don't have an option. So the analogy of a smart contract is I borrow money from you and I say I'm going to pay you back. Or maybe let's use a different analogy. Let's say I bought your car for $30,000 and you send me the title and you're waiting for me to send the money. And you're waiting for me to send the money. And you're waiting for me to send the money. And you call me and I'm like, yeah, it's coming. And it hasn't come.
The check's in the mail.
Right, check's in the mail. Right. And now you got to go through a whole process, right? Well, if you had a smart contract that said as soon as the digital rights to the car, the title goes to this address, immediately $30,000 goes back to you. Right. Now it's not about I'm going to do what I say I'm going to do. Please, you should trust me. Everybody knows me. You can ask around. All that goes away.
It takes the complexity out of it because it's just one thing, one simple transaction.
Exactly.
I like that.
It also seems like with, if governments or bigger companies, you will be able to see full transparency and follow trails of money, or maybe, I don't know, with the military, you can see like, well, they're spending all this money here or there, or where funds are actually going.
Elon wants to do that. I remember reading a story that Elon, there was this whole like anti-rich movement going on, and especially I think like 5 years ago, and they were saying, you could solve world hunger and all that, which he can't. But he basically said, I will donate, it was billions of dollars to a charity if you put all of the transactions on the blockchain. Because the dirty little secret about a lot of charities is like 20 to 30% is getting to the end constituent that you're trying to support. And a lot of it goes to administrative costs, the people that run the charity, like all sorts of different
lining
things.
Pockets and shit.
Just lining pockets, right? And crypto has mostly been about eliminating middlemen. That's been a big ethos in crypto, which is we don't need all these people taking a chunk along the way. In the end, that's bad for the end consumer, and that's bad for the end person.
I mean, if he's trying to make the government more efficient, that would be the most efficient thing you could do, because all politicians are just
I just don't know how we're going to
lining
do
pockets.
black ops and stuff. Like
That's true. Okay, maybe that one's not.
or maybe everyone knows.
Yeah,
you know?
exactly.
Just gold nuggets.
Yeah, we got
trade.
this slush fund over here, and we don't talk.
Have
about
you guys
it.
seen the new Time magazine cover with Elon on it?
I haven't. No.
It's amazing. It makes me actually, for the first time in a long time, want to buy one just to have it. It's his profile of his face, and there's a checkbox, and it's like X through like launched a rocket, landed a rocket, launched this thing, and then there's two boxes at the very end, like save $2 trillion in the government, and then there was like go to Mars, and there were like two boxes left untagged, where like 4 or 5 others were tagged off. It's such a cool cover. Yeah. What do you think about Vivek and Elon getting in there from a financial perspective for markets? And
I'm excited about it. I think everyone has gone to this place in politics where we just want we want to try something different, right? I think that's where everybody's at. So, I don't.
Let's change it up.
Yeah, let's change it up.
Let's fucking change it up.
Right. Let's just see what happens.
And we're not going to get a time in history other than right now. When are you ever going to get a billionaire,
right,
to be able to like, I'm going to go and not really work for the government, and I'm just going to do this, even though I have 5 other companies I could be running, and I'm trying to go to Mars.
Yeah, I mean, it's like Joe Rogan jokes about in one of his bits that if an alien race came to the U.S. or to here to Earth, and you tried to explain why Kim Kardashian was like the most popular person on planet Earth, they would just want to like destroy us. They would be like, you guys are worthless. And it's sort of the same with politicians. It's like, okay, who runs your country? I bet it's the most successful. Like, I bet you have to
kind,
go
enlightened, smart person.
The aliens would be like, you probably have to go like demand that these really successful, smart people take time to serve the government. Like it's probably hard to pull them away, but that's who you want to get in there, and that's probably who you guys get in there, right? It's like, no, we just get career politicians. And like, what's that? Well, it's really just somebody that like tries to get attention. And if they can get attention, and they'll basically usually say whatever gets the most attention at the time and the most votes, then we put them in charge. And they would say, but they don't have any like core competencies to rule the country. Like, no, they're just really good at navigating bureaucracies. And they'd be like, well, this is extremely depressing and inefficient. Maybe we need to destroy all you guys.
Yeah.
But that's my observation of politics. It's funny. I've always been a behind the scenes person, and I took a lot of pride in that. And recently I've been doing a lot more public stuff. And one of my recent epiphanies was with the information age and everybody having a podcast and influencers. Look, there's people that they are the expert, right? And they spend a lot of time becoming an expert. And then there are people that have spent a lot of time looking like the expert. And they're actually very two different things, right? In fact, they almost pull away from each other, because becoming the expert is going and doing deep research. It's listening more than you're talking. It's seeking to understand and being very careful about having a strong opinion about something you don't. Where looking like the expert and becoming popular and getting a lot of attention is the opposite. It's being loud and boisterous about things you don't really understand and you don't really comprehend, and focusing on how to get views versus how to have quality content. And so this is, I think, politics, there's kind of early manifestation of that, right? That's what politics are. Like looking like you're smart versus like Elon, everyone recognizes he's smart, but he's not trying to convince people he's smart,
He
right?
just does smart shit.
Just doing dope shit. And like everyone, I mean, there's this book I love, So Good They Can't Ignore You. And that's like Elon Musk to a T. Like he's just doing such amazing stuff that you can't ignore him. And he's become popular because of it, but he's not directly doing an effort to become popular.
I love it.
Yeah. They say the loudest guy in the room is probably the most insecure, right? And that's all politicians. They're just out there trying to be loud, get attention, garner funding. But you're right, they have no core skills.
No core skills except getting attention.
Yeah.
It's like, I'm sure you guys have talked to, I mean, when you meet some influencers, the influencer age is fascinating. You realize there's really not a lot.
There's nothing behind those eyes.
Nothing there.
Just
like nothing there.
Lights on.
Yeah,
no
when the
one's home.
camera's on, they're a totally different person. They know what to say. They got great editors, all this. But you take away that and you meet them out at a party or a mixer or something. You want to start, talking about their area of expertise and stuff. And this isn't, of course, everyone, but there's a lot of people. There's just nothing there. Like they're just I'm trying to figure out how to hack virality. I'm not trying to actually figure out how to follow this thing really well. And in crypto bull markets, you see a lot of these people emerge, right? So you see a lot of, I'm the expert. How do I know you're the expert? Well, I bought this NFT and now it's worth $1 million, or I bought this other thing and it's worth a lot of money. And of course, when you're a traditional financial institution and you're looking to place $10 million or $50 million with an asset manager, and you talk to somebody like that that's been successful in the space, and you start to realize they don't really have a sophisticated thesis or way that they think about investing. They're more speculating, and they're, it's like I went to Vegas and I won $100,000 playing blackjack, like sort of, explanations. Then I think that hurts the space. So coming back to like, I actually, most crypto native people, we get really uncomfortable during bull markets. People would think it's the opposite, but you just start to see this frothiness, and you see a lot of loudness, and you see a lot of fakeness. And in the bear markets, it's the people that are there for the right reasons, and they're putting their heads down, they're building.
Not the fair weather fans.
Right.
Yeah.
Yeah, you see a bull run, and then all of a sudden there's thousands of new influencers on TikTok promoting their program. They know what they're doing, blah, 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 just because they had some money in it.
They hit a pump and dump, and now they think they're hot shit.
Yeah, exactly. 100%.
What ways do you see blockchain change? Like, I know we talked about this a little bit, but ways that blockchain is going to change the country, the industry, the world. For instance, do you think the stock exchange would ever be put on a blockchain?
100%. I think.
How far out do you think we are?
5 years. Yeah.
Okay.
Maybe 10, depending on regulatory hurdles and depending on how, Trump is very pro crypto. Elon is pro crypto.
Which is a crazy time that we now have 4 years of pro crypto people in the government.
Yeah. I mean, we have a newsletter we wrote that's pretty, people underestimate it quite a bit. I mean, Trump was at the Bitcoin conference, the BTC conference in Tennessee, in Nashville. And he gave a speech there on how he was pro crypto. Crypto is one of those interesting things where early on, I would try to convince people to be pro crypto or be in crypto. And I realized it's kind of a fool's game. But it's amazing how people form strong opinions about crypto, and I almost never meet anybody that has a strong negative opinion about it that's spent a lot of time researching it.
When I lose money, I have a strong negative opinion, but then that goes away very quickly.
Yeah, 100%. But it's like, that's sort of like, if you lose money on a stock, are you negative the stock market? Right. But everybody talks about crypto still in a binary sense, right? Like, is it here or is it going to zero? It's always been this fascinating binary conversation. And I think people don't realize, you go to a crypto conference in Dubai, like we went in April to Dubai, and there's 30,000 people there from all over the world, right? And you go to, we went to Singapore a month and a half ago during Formula F1, and there was 2 conferences we went to, Breakpoint, which is Solana's conference, and then Token 2049. There's like 20, 30, 40,000 people there, right? And like, it's like, this probably isn't going away in a binary sense.
I have to ask this dumb question.
I love dumb.
Where do babies come from?
Okay, so like in stocks, sometimes you see like Amazon, I haven't recently looked, those things can get up, or Apple like $200, $300, $400 or whatever. Bitcoin started at, $13. Now it's like 100,000. I imagine people also on the outside are looking like, how can anything fucking go from 13 to 100,000? And what is the like, how can it far can it go? Because usually isn't it based on, the term I forgot.
The halving?
No, the
Market cap.
market cap. And that's how you can figure out the possibility of it be able to expand, right? So
Yeah.
how far can it go? How is it at 100,000? This is my own dumb question for my personal knowledge.
Yeah, so let's talk about that a little bit. So Amazon, right, at one point was worth $1 million, right?
Mhm.
And now it's like $1 trillion effectively company, right? So similar kind of exponential gains, right? In fact, if you invested in NVIDIA over the last 12 months, you'd have almost performed as well as Bitcoin. And that's a mature company, right? So now you enter the conversation of valuation, right? And this is actually one of the things I think being a venture capitalist and trained in that helps me think about things differently. So when you invest in early stage companies, there's a valuation set on that company, right? And it's usually the earlier the company is, the less that it's set on really anything fundamental. It's more compared to what are other companies raising at. And yeah, there is like a science behind it, but really it's as much art early on as a science. And generally you just say, okay, we're going to value your company at 5 million or whatever. And we're going to put, a couple $1,000,000 in, and we're going to own 1% of that company. And you don't really know how the company is doing from the sense of the valuation perspective until you raise money again. So usually it's about 2 years. And the company's either been really successful, and you kind of go through the same dog and pony show where early it's as much as an hour, but you say, look, we had $100,000 in revenue when we, raised at the previous valuation. Now we have $2 million in revenue, and we think, this company's worth $25 million. And this happens every few years. And so the reason why doing venture capital is interesting is you really don't know how your investments are doing. And the increase in price is based upon what somebody's willing to pay, right? The next round. If no one's willing to pay, you're kind of in trouble, and you just assume that the valuation is what you raised money at the last time. And then if people are willing to pay a lot, like they're really hot on it, you run an AI company or whatever, right? And it's like, oh, now it's worth $200 million. But this is all funny money, right? In general, it's illiquid. You can't sell it. There's some special occasions, but I've heard countless talks by founders that were worth like $40 million technically, and then their company went under and they were worth nothing, right? And so it was like they held a bunch of private stock. They couldn't really sell it. The company raised a bunch of money, and then everyone found out the business model didn't work, or, there's something happened in the macro environment where like the thesis didn't work out. So I think there was like this one company, I think it was called Homejoy or something, that it could be the wrong name, but it was like it's basically like an Uber for house cleaning or something like that. I'm probably butchering the model, but I remember hearing this founder talk, and she was like worth nothing. And then she was worth over 6 years of raising money, like 40 million. And then she was worth nothing again because they found out the business model doesn't actually work. And
Wow.
so it just goes away. Right. And so VC in its highest form, when you think like the Sequoias and all that, they're looking for what's called unicorns, companies that they can invest in at small valuations, and they're worth 100 or more X in the future. Right. So think we invest at 10 million, we want you to be $1 billion company. And that's the way it works. In crypto, the price changes all the time, right? Like instantly. Constantly. And it's actually really probably bad psychologically for most people, especially your average investor who gets really nervous, right? So you're either euphoric or you're depressed. Your dopamine levels are shot to shit all the time, right? Because you're like, you get attached to the number that you were at, and now you're at a much lower number, right? Or suddenly you're at a much higher number. And it's a lot of these emotional fluctuations, which studies have shown humans are not actually very good at. And when these things happen, we tend to overreact, right? So we sell something when it's low, we buy more of it when it's up, because everybody's talking about how much more it's going to go up. And the reason why I like the analogy of crypto being liquid venture capital is I think that's a really good explanation for somebody that's familiar with these these worlds, right? So you're investing in a company that's priced in real time. And what is the price influenced by? What someone's willing to pay for it, right? So it's really the last purchase price or the last sale price, right? This is true for Bitcoin, but it's also true for stocks, right? Like stocks are on a market and the valuations primarily are hinged upon what people are buying and selling at. And the more mature a market, the more if the quicker somebody will detect if something is undervalued, like an Amazon stock or an Apple stock, and it won't drop too far because there's always willing buyers at a slight discount, right? They're like, oh, like Apple's down 5%, but we think they're going to do awesome. We'll scoop a bunch of that up. And eventually enough people do that, the price goes back to where it was, sort of deal. So Bitcoin is really, why is it at 100K? Well, it's because somebody was willing to pay 100K for it, right? And Bitcoin is a unique value proposition in the sense of it's promising to be this store of credit or store of future returns and a ubiquitous bank for the world. So we wrote about this in our newsletter when a fascinating thing happened this year. And I kind of immediately recognized what happened when Russia was banned from the financial system, the SWIFT financial system. It meant that they couldn't do banking, and a lot of people in Russia couldn't move their money around. Well, immediately, what did they do? They unbanned crypto and they started building up a crypto reserve, right? Because if you're a country and you see that the big boys, being the US and the major players in the global monetary system, have the ability to cut you off from your lifeblood financial system, you want an alternative to that. Just like you would want an anti-missile system if you saw another country building up really strong offensive missile capabilities. And so what had happened is Russia immediately recognized this, and I think a lot of other countries recognize they need a Bitcoin reserve just in case they need to move money around and somebody decides we don't want you to move money around. So, the ability to control your finances and to do business without any other third party, I believe is a fundamental human rights. There are some governments would say that's not true. We get to dictate whether you want to have money or not. And in the US, we come from a very privileged, right, background, right, where we don't really have these freedoms infringed upon too often, but it does happen, right? Like at any moment, your bank could say something's been flagged with your account and we're going to freeze everything, and your life would be severely disrupted. I remember talking with somebody a few years at a Bitcoin conference that got really into Bitcoin because the IRS came and froze all of his assets. And he said he would have lost all of his business if he didn't have Bitcoin. And it took him 6 months to unfreeze him. They cleared him of any wrongdoing, but it could happen to any one of us. And it could also happen to countries. So the price of Bitcoin can go up effectively indefinitely if people value that, and combined with the fact that there's only so much Bitcoin, right? There's only theoretically up to 21 million Bitcoin. So it's like, how high can the price of gold go? Well, it's the same concept, right? It's barring that Elon goes up and mines a bunch of gold from asteroids. There's only so much gold on Earth, and it's actually a very much smaller amount than people realize. And so the more demand that is for it, because you can't increase supply, hypothetically, the price can go up indefinitely. But I think what's most important to focus on versus the price is the utility. And is our countries, our people going to increasingly want a way to have access to money that they can spend however they choose to spend it without somebody saying you can't do that? And I think most people agree, yes.
So I have a question for you about the utility.
Yeah.
So like you were saying before, different coins have different use cases. They have different specialties, essentially.
Sure.
And is Bitcoin as popular as it is because it was the first one? Or does it have a very unique use case? But from what I understand, Bitcoin is kind of like the clunky first child, right?
Yeah.
So what is the use case of crypto, and how do you see that emerging more? Or do you think it'll start going into Ethereum or more lightweight things that have more specific use cases? I don't understand them really, so I'm curious.
No, love the questions. So Bitcoin is, I think, unique in its sense of it's promising to be a store of value, which most cryptos aren't promising to be. So
what do you mean by a store of value? It's like a like a savings account essentially? Or?
It's a way to preserve the purchasing power of your dollars. So, right, you have if you and me have $1,000 today, it's going to be worth a lot less in terms of purchasing power in, 10 years, 20 years. Right. Like, cars used to cost $3,000-$4,000, right? Now they cost,
especially if they keep printing money.
Exactly, which they will. They have to, right? And so the original idea behind Bitcoin was, how do you get out of this system? How do you develop an alternative system that people can opt into, right? And so there's the decentralized component, which is, you can't shut it off. You have you have this system that really can't be stopped, and you can spend your money how you want. And there's this store of value, which is essentially because you have limited supply, and hypothetically you have increased demand through network effects and through adoption and people wanting to use it more and more, people are going to want to increasingly hold Bitcoin. The reason why it's analogous in the media use to digital gold is for that very reason. This is how people use gold, right? Especially when they're in fearful mindsets, people have always bought gold. Now, the irony is people rarely buy gold, right? They buy a synthetic representation.
Promise of gold.
Exactly. Yeah. A promise of gold. And this, we could get into all the nuances there. And so Bitcoin, it hasn't proven it's a good currency. And I would argue it's not a good currency because, nobody wants to spend their Bitcoin because they're worried it's going to be worth more tomorrow. Yeah. And there's this thing called velocity of money, which is how much money is moving and flowing. And you want high velocity of money. You want people buying and selling all the time. And if you have an asset that everybody thinks is going to be worth more tomorrow, they're going to be very hesitant to spend that money. And so specifically to Bitcoin, I think it's an amazing store of value, and it's proven to be that. In fact, there was a chart that I just saw the other day that showed, if you wanted to buy a house with Bitcoin 10 years ago, it's 10,000 Bitcoin. And then it was 7 years ago, it was whatever, let's use round numbers, 1,000 Bitcoin. And now as of today, for 5 Bitcoin, you can buy a house. Well, that's a really good store of value, right? That's a really good way to store my money. And so we don't know what the future holds, but historically, we've seen that the purchasing power of a Bitcoin has gone up, while the purchasing power of a dollar, any dollar, right? Any dollar of any currency has gone down. Right. And so Bitcoin has that specific thesis. Now, Ethereum, which you mentioned, and layer ones are different. They're application layers for people to build on top of. So Ethereum is talked about as the world's computer. And it's basically a computer that anyone can tap into and use for computing purposes to accomplish some end goal anywhere in the world. And the token that's represented on Ethereum is the token, it's Ether, and it's used to basically facilitate transactions and to incentivize those computes being run on that computer. And then you have applications that are building on layer ones or layer twos. So this is if we wanted to go start a real estate tokenization platform, we wouldn't build our own chain. Why would we do that?
You would use ETH or some other layer one.
Why would you build an app store to try to sell your application?
I see.
Right? Why would you do that? Okay. You wouldn't do that. You would use the developer toolkits that Apple has. You would use the support. A lot of these chains have grant programs that they would give us money. They'd say, we really like what you guys are doing. We're going to help support you. And then we would probably go raise money from VCs that specialize in that area, and we would build an application on top of it. And we may have our own token. And, just like the rights of stocks and shareholders can be written anyway, you can write token rights anyway. And some of them are frankly dog shit. Some of them, there's it's this token doesn't need to exist. You're just using it as a way to raise money. And that occurred a lot in 2017 and 2019. There wasn't any oversight of the raising. And so you had a lot of these bad stories.
This is meme coins and shit?
Yeah, even regular projects, man. People would raise money, people would raise $10 million and there was no board, no governance. So you and me could raise $10 million and we just go give each other $3 million each and we split we would just say, we actually don't want to build this anymore. And that happened a lot. And so when this stuff happens, it sets back the industry, right?
Yeah.
Like and I'm not even talking about meme coins. Meme coins actually at least are honest. They're like, we don't really have any utility.
We're just fucking around.
We're just fucking around. It's for fun. And like, if you want to buy it, that's awesome. And like, I know some guys that launched some meme coins, and they always joke. They're very candid about that. They joke about it. And I know a guy that launched a very successful meme coin and made a lot of money. And so that's fine, but it's not really investing. You're speculating.
Yeah.
Maybe that's gambling.
Gambling. There may be some science to it, but there's science to gambling, right? Like people that are pro meme coin will say, well, we can look at like social indicators. We can look at what's trending on Twitter. We can, look at all this. It's like, okay, well, yeah, I mean, it's the same. Like there's advanced strategies for
it's
playing
poker, not slots.
Sure. Yeah. I mean, maybe poker. I would argue it's not even poker. Okay. But yeah, let's say it's poker. So
it's craps, maybe.
Yeah, maybe, or blackjack. There's card counters and professional blackjack people. So that's fine. And there's nothing wrong with being transparent. But, there are a lot of projects. Crypto's interesting. I've talked about this because of the SEC and the way the SEC's handle themselves. And I did some content about this recently, but basically what's happened with the SEC to date, I think it's about to turn a massive leaf because Gary Gensler just said he's leaving. But basically every few months, the SEC would sue a crypto company. And in fact, they even sued Coinbase, which is insane because Coinbase spent a ton of money constantly trying to meet with the SEC and prevent being sued. And the idea was basically the SEC would come to you and say, hey, you got to follow the rules. And you said, cool. What are the rules? And they go, I'm not going to tell you.
Classic government.
Yeah, classic government. But even worse, right? It's like if you were trying to figure out your taxes, but they wouldn't tell you how to do your taxes.
They kind of don't.
Well,
to a degree.
We could get in the nuance of that, but there's at least like hardcore stuff, and like even the attorneys are like,
I'm sure it's way worse with crypto.
The attorneys are like, we're doing everything we think will work, but we don't know, and so there was this really negative environment. It kind of broke my heart because if you think about where the U.S. would be from an innovation and leader perspective in the 21st century, if like Google and Facebook and all the mammoth companies like Amazon had decided it was an unfriendly environment. So what you were seeing is a lot of crypto companies were moving overseas. And they're like, we don't want to deal with the U.S. because it's just like this. It's this like, and if you're a VC and you invest in a crypto company, you kind of want to be in the U.S. either because you're like, my investment could go to zero just based on the SEC getting a wild hair that they want to go after a company that I invested in. This is what happened to Ripple. So it sets everyone back like tremendously. And so you had this very negative environment, and that started to churn a leaf. And I think that's going to clear up. But because of that, a product of that is you would have like a decentralized protocol like Uniswap that would be earning hundreds, tens of hundreds of millions of dollars in revenue a year. And you would have token holders that own the token. But guess what? You don't get a right to any of that revenue. Now, the good actors weren't giving you a right to that revenue because they didn't want the SEC to come after them for selling a security. And their lawyers were saying, hey, if you give like an income or dividend, it's like pretty much going to say it's a security. And so they were hesitant to do that because there was no framework to evolve into like, yes, we are a security, but we're following all the rules and this is who can buy it. And there was no way to go down that road. It was just too much risk. And so you had the good actors weren't doing it for those reasons. And then the bad actors were taking advantage of it. So they were launching tokens with really no utility. And they were hiding behind this, all this terminology and idea of like, this isn't an investment. This is just, we don't award these rights and all that. But really they were being selfish, right? They weren't, it was like, oh yeah, you invested in my company, but we gave you really bad shareholder rights, essentially. So what I'm hoping happens very quickly in the industry, and you've actually started to see this already with a bunch of decentralized protocols and decentralized exchanges, is that they're churning on the what's called the fee switch or the revenue share. So they're saying, we're earning tons of money each month from fees. We're now going to start sharing that back to token holders. And if we need to register as securities, we just hope that there's a framework to do that so everybody benefits. And that's really important for the industry because your bullshit meter goes off pretty hard when somebody says, we want you to invest in our company and we're going to make a lot of money, but you don't get any right to the money that we make. And you're like, well, that's what drives the share price. So how could I justify that my shares are going up in value, or who would want to buy this share from me at a higher valuation if they get no right to the success of the underlying business. So this happened for a while in crypto. This has really happened since 2017. And I would be vocal about it. And sometimes I get some pushback because people are like, look, man, we really are advised by our lawyers that we're paying, 7 figures a year to not talk about anything that would trigger anything having to do with like the SEC coming after us. And it was really like based upon like the boogeyman under your bed, right? I don't want to say anything the boogeyman might not like, sort of deal. And so I think we're turning a leaf on that. And I think to your point now, you're going to see a lot stronger utility use cases that align the success of a tokens project with the token holders. And those things should correlate, and there should be more fundamental basis for why this token is worth a lot. Like why should I pay X amount for this token? Well, because it's giving you a 10% yield per year based upon how this project's doing. And we think the project's going to do even better in the future. And so maybe it'll be a 20% in the future. So now you can start to do traditional financial valuation calculations and kind of figure out, okay, what's the fair price of this asset?
So that makes sense now why people are so excited that the head of SEC is standing down.
Yeah.
Right? Because he's driving away all these crypto companies.
Yep.
And making it complicated for them to operate. Also, where I think in one of Trump's speeches, talking about how he wants this to be the number one country that supports and grows people who want to have crypto and be on the blockchain.
Yeah, man. I mean, it's actually huge. So, if you think about the history of the United States, ever since like the Manhattan Project, the reason really why we won World War II is we were able to attract the brightest minds from across the world. And every technological revolution and evolution since then has been based on entrepreneurs all over the world talk about how you need to be in the US, right? Because in the US, you don't have like caste systems, you don't have an overpressive government. I look at what happened to the founder of Alibaba in China, right? When he went against China, his company was taken away from him. And so the US has always been known as this place that if you're really, really bright and you're really ambitious, you want to start a company here. Why? Because we have the best systems for you being able to build the rewards for your effort, for your family, for the people close to you, and then obviously for the shareholders. And so what was not happening is that was starting to become not true. So all these other countries, like Singapore, Dubai, lots of places in Europe even, were passing legislation that gave clear rules on what you could and couldn't do. And so last 3 years, crypto companies have just been relocating overseas, but they want to come home. Like they want to be in the US because the US is still like not only the technological hub of the world, but it's the financial system as well. And crypto obviously is intertwined with the financial system. And so, I was really considering relocating to Dubai depending on how the election went. And I was talking to a friend of mine that's over there. He's a very successful crypto guy. And I was telling him, man, I'm thinking about going over there. He goes, well, you should probably wait. And I'm like, what do you mean? He's like, well, because if Trump wins and stays as pro crypto as he's been saying, we're coming over there. He's like, so we're just gonna be crossing. He's like, you're gonna be go where everybody's leaving. Yeah. And I thought, he's really well networked, right? And he was speaking for a lot of companies. And so Trump's even talked about how, and obviously all this has to be passed, politicians talk, but he's talked about how crypto companies that are headquartered in the US, you won't pay taxes on buying and selling their tokens. And that's massive, right? Dubai's done that. Other countries have done that, but they're doing it as their advantage versus the US, where if we can play catch up a little bit, I think we can mitigate a lot of that damage that was done and get a lot of these founders and these companies back here, headquartered here, which once again, it's like people don't realize how much even our military would be behind if all the cloud computing platforms and all these other, famous public companies that we know of, if they had migrated away from the US and gone somewhere else. And you're seeing the same framework with AI, right? So I think what's exciting about the new political change is that they're very pro entrepreneurial and very pro emerging technology companies. And look, between crypto and AI, these are the most important technologies of who's going to be the dominant global superpower in the future. I mean, the founder of Google talks about how important it's going to be to have the most powerful AI for your military efforts and your defense efforts and different things like that. So I'm really hoping that we can make good on a lot of this. It'll be good for all the industries.
I love it.
Beautiful, dude.
I got one more question.
Yeah.
Get it, dude.
I mean, I got time.
So is Ripple the creator of XRP?
Mhm.
So talk to me a little bit about XRP, because I saw like I think an article pop up, something about Japan was thinking about using it as a potential currency. Was that correct?
I haven't heard that. Ripple, it's funny. I talked with a CTO here this year at a conference. I got to catch up with him. He's just one of those guys that you can just tell is like an uber brain, right? Like you're just talking to him and you're like, this guy's like a genius. And
what about like when you're talking to him, what gives that off? Like just the cadence of a voice, or he's just looking at you like you're a Neanderthal?
I mean, usually actually my conversations get better after a few minutes, because when you're at a crypto conference, you're so used to people coming up and you're never sure where they sit on that hype spectrum and educate spectrum. And I can pretty much talk the talk. So after about 2 minutes, he realized I wasn't a fanboy, that I was like actually in the space and we could have a pretty productive convo. But, he just like, he had like if you and me were cast in a movie and we needed like that Uber hacker, for like a movie, like he just looked like,
guy.
he looked like that, like the glasses, the long, grayed hair, like he just looked like, he's hacking the mainframe at some point in some scene. And we started talking, and Ripple's really doing some interesting things, but their core use case has always been a way to settle transactions and conduct business bank to bank. And so I haven't heard that the Japanese government is considering recognizing them as an official currency.
I don't know if it's currency, but maybe they're thinking about integrating it into their
right. So that's always been their whole thing. Is they were very specific. They're going after enterprise use case, and they want to be the next evolution of the financial system that banks use internally to conduct transactions and to settle payments. And so, obviously, when they got sued by the SEC. This introduced a new risk vector for token holders, and the token hasn't moved except in the past few months at 3x, but it hasn't moved in forever. And because of a lot of what they're doing is behind the scenes, in the sense of its meetings with banking executives and stuff that you and me don't get insight into. Like, we're not going to meet people that are using Ripple, like on your average day, right? You're not going to be like, you and me are going to be like, hey, I was just on Ethereum and then I bridged over to Solana and my friend did this. And like, we're not going to have conversations about Ripple like that. And of course, there's things that they can't discuss there because of the regulatory hostility and all that. And they were hesitant. Plus, they're in the middle of a lawsuit with the SEC. But I do think, like, from talking to Ripple's CTO, everybody's like, well, it sounds like there's a lot of people that are like, we love using your system works really well, but we're really worried that we're going to implement your system and we're going to spend all this money upgrading to this new infrastructure, and then you guys are going to be banned by the SEC, or, you guys are going to go bankrupt. And so what's really held back the industry from an enterprise and institutional adoption to date has been this clarity of framework, right? Because if you and me run a bank, do we want to spend $3 million, $5 million, $10 million investing in a new system that theoretically next month could be deemed illegal, or we're told not to do it? We had Caitlin Long on, who is pretty famous in the crypto space, and she started a crypto-friendly bank in Wyoming. And it's funny, when Caitlin came on,
in Wyoming.
Yeah, Wyoming's got like really favorable crypto laws, and
really,
she's a really successful entrepreneur, and she's like a powerhouse.
Wow.
And she was almost sounding like a conspiracy theorist there for a little bit. And Caitlin, I love you if you're listening, but like, she came on my podcast and she was talking about how there's this big movement in the banking system to suppress the crypto industry, and I kind of thought it was maybe a little overblown, or she was just sensitive to it, until we started to look to just get bank accounts for our fund. And we started running into, every bank was encountering the same problem, which is this ambiguous fear. So I had conversations with banks, and they would say, we basically have somebody, there's like a whole, bureaucratic system with banks, but somebody would come in and basically say, hey, we noticed you two, you got a lot of crypto related companies accounts in your customer base? And you go, yeah. And they go, we don't like that. And they go, and you go, what do you mean by that? And be like, we're just telling you we don't like that. And
you're not welcome around these parts.
And then you guys would be like, shit, they don't like it. What do we do? And like, I don't know, maybe we cut like 20%. Do you think that'll work? And like, let's try it. So then 20% of companies, legitimate companies, you're like, hey man, we got to close your bank account. And you're like, and they're like, why? And like, we don't really know, but we got to do it.
Big Papa told us we got it.
Yeah,
I don't know.
like they didn't really give us any. And this is this weird random enforcement, and I would say soft mafia-like threats has been actually going on in the crypto industry for a long time. And I think actually it's probably going to come to light. I feel like someone's going to write a book about this when all the clarity happens. And so that was with the old administration. And the hope is that that clears up as well. And so there is a lot of weirdness that I'm thinking with the administration goes away. And I do think if we can get some of this weirdness cleared up, we're going to see massive enterprise and institutional adoption because the people want it. People want to be able to deposit at JP Morgan. They want to deposit their Bitcoin. They want to be able to use their crypto to pay for things. They want to alternatives to credit cards if they, just in general. And so the reason why this has all been held back is this just random enforcement. And if you're an investor, it makes sense, or if you're a company looking to make an investment in infrastructure, it makes sense. It's too big a risk, and you can't define it. And now that hopefully is going away, knock on wood, then I think you're going to see a massive surge of adoption over the next really year if we can clear up this regulatory environment.
That's amazing. So just to go back real quick, is XRP its own like blockchain for So that's where, and then everything that is tracking financial transactions will be on that individual chain.
And this is important.
So like Solana's like a where you can build lots of different programs and different tokens and things like that, and this is now its own separate one.
XRP is a layer 1.
Yes. So XRP has their own layer, and they settle things based on the rules of their layer 1. And this is important. Just like tokens, you can assign any rules. It's the same with layer 1. So some layered chains are realizing they want to work with enterprises, maybe banks, and they don't want a fully transparent environment, right? Or some layer 1s are saying, we're going to create this layer 1 that's a sandbox, but you can choose as the customer what information you want to be transparent or not. So, this is why there's lots of different chains emerging, because there's specific use cases. Crypto, when it started off, was very backwards from a traditional startup journey. A traditional startup journey based on startup theory is you and me go interview a bunch of, let's say it's a B2B business. We go interview a bunch of executives. They tell us the problems that keep them up at night. We look for a common theme and we say, we're going to go solve this problem. And then we go build something tailored to specifically solve that problem. Crypto built this general technology and then tried to go find problems to solve. And it's really bad. And you saw a lot of crypto companies fail. And really, this is why they failed, is because they were a hammer in search of a nail, right? And so they would go to companies and they'd say, we got this thing that can do all kinds of different things. Why don't you tell us what you need it to do? And it's like, yeah, that's not how technology works. Technology is just the facilitator of the problem solving. So if I go to an executive and I say, I'm going to double your revenue or half your expenses, they may want to know how we're doing that, but they really don't care. Mm-hmm. If I say we're cutting out magazine coupons and we got some magic machine that converts them to X, he's like, cool, great, whatever, I don't care, right? If you say
he just wants the outcome.
Just wants the outcome. And so it's its own chain that banks use to settle transactions. I believe there's some privacy parameters set with it. I'm not super in the weeds on XRP's specific solution, but it is the nuance there is it's a chain, it's got its own rules, it's custom built to solve this specific problem, which I view as a good thing. Ethereum's a little bit more general, and it's more of a general platform. And then I think you're just going to see additional chains launch that facilitate specific kinds of applications in the future.
Amazing.
Yeah, I feel like I understand crypto better, but I also understand it worse because I have more questions.
Perfect. You're right where you need to be.
I'm probably 1% smarter, but I feel 40% dumber.
This is like when I did when sometimes when I do these educational programs, I did like a 3-day retreat, or one of our questions was, what do you rank your blockchain knowledge 1 to 10? And people would come in and they'd rank it like a 6 and 7. Which to me, I don't think anyone on planet Earth is higher than an 8. Because like the rule of like Malcolm Gladwell, how many hours it takes to be an expert. It's like crypto just hasn't been around that long. Nobody's been crypto for 20 years.
Yeah.
So it's like, and then when they leave, it's a like 1 to 2, right? Like same question. It's like, now I know enough to know how little I know.
Yeah, there's a paradox. I can't remember the name, but it's basically the more you learn about something, the lower you rank your actual knowledge on.
Yeah, 100%.
Yeah, you think, Your peak confidence is when you're just starting to learn something.
That's why like high performers, they ask a lot of questions and they listen. They're always hesitant to give an example because immediately versus the confidence of somebody that knows very little, they start to think, well, that answer is partly true, or like they know all the nuances in it. It's the same with any field. Like you said, it's a very famous
Dunning-Kruger effect. That's what it's called.
Yeah, that's right. Yeah. Well, guys, thanks for having me on. This has been
Mike,
awesome,
thanks
man.
for coming.
Yeah,
it was awesome to have you.
Yeah, chat. Where do people listen to your podcast, find you if they want to work with your fund?
Yeah, digitalwealthinsider.com. We've also I'm on all the social channels, Mike the Crypto Guy. We put a bunch of short content. We put a bunch of interviews that we have with founders, and I'll do some educational kind of content on different concepts within crypto from beginner to advanced.
Awesome.
Beautiful, man. Thanks for coming.
Awesome.
Yeah. Thanks, Mike.